Hello, everybody. Today we'll be covering a case study on Nikola Corporation. This case will have 7 sections. The first section will be a brief case introduction by myself. We will have the vision, mission, and history. We will have a strategic analysis, which is going over the pest analysis. We will have a industry analysis, a internal analysis, a SWOT/business level strategies analysis, and lastly, section 8 is the McKinsey 7S. So first up, going over just a brief company overview of Nikola Corporation. What is it? What do they do? How do they make their money? So Nikola is a very ambitious company. They aim to revolutionize the Class 8 heavy-duty logistics through a first-mover hydrogen fuel cell advantage truck and proprietary energy network. So basically, they are selling a hydrogen cell fueled truck, which is kind of like a EV truck. It doesn't use diesel like the vast majority of current shipping trucks do. And they also were going to sell the fuel as well. So they're going to kind of own both of the revenue streams there. This all-in-one promise, instead of just kind of selling the vehicle, they plan to not only lease the truck, but to lease the hydrogen fuel and the maintenance together for one fixed price, which would hopefully make it easier for companies to switch to their new trucks. So they were a disruptor company. They were coming into the trucking industry that has been relatively stable for a long time, not a lot of innovation, and they were trying to disrupt that and bring new technology and new innovation to that industry. And it was a great idea on paper, but the reality check is that this company unfortunately has sort of failed as of December 2025 here. This company is currently bankrupt. Our group, during this research and looking into this company, we found a lot of things that they did wrong, that they could have done different, and it's a very important lesson to learn. It's important to look at companies that are successful and kind of what they have done and what has led them to be successful, but it also could be important to look at companies that haven't done well and to learn from their failures. That's the main thing that we are taking away from this case study that we have done this semester. Going now into the vision, mission, and history of the company. So their mission statement is, in quotes, pioneer solutions for a zero emissions world. This is obviously something that is a big discussion in today's world. It's a big problem, right? We deal with a lot of pollution, a lot of, there's global warming and all of that. It does get a little bit political, but it is seen as a pretty big problem in today's world, and they were trying to fix that much like a lot of companies do. We'll kind of get into their competitors later on. But as far as the vision statement goes, this company did not have an official one, but its future direction was kind of communicated through its overall strategies and core values. These included transforming the transportation industry, again, kind of what we talked about, going into the trucking industry and disrupting it, becoming a global leader, and creating an ecosystem. They wanted to build out the complete hydrogen refueling infrastructure, which again includes supply, distribution, dispensing, and support to the zero emission trucks once they're sold to companies. Going over now the history of this company. So 2014 to 2020 was the golden age of this company. This is when there was a huge rise in the stock price. It actually reached a peak valuation in June 2020 of 34 billion in terms of market cap. So this was actually larger than Ford at the time. Despite this huge valuation, they had $0 in revenue. This was before they sold a single truck, and it kind of just goes to show that the management was able to sort of sell a dream of extreme growth, and they sort of, I guess, fooled investors and Wall Street and a lot of people, right? Their entire valuation, this 34 billion, was based off future growth, and that this company was going to do exactly what their mission statement said: become the leader of this zero emission wave. But as we kind of go down the timeline here, that is not what happened in 2020. I believe late 2020, early 2021, the CEO Trevor Milton was basically accused of multiple reports of fraud and basically lying to not only just investors but customers and to everyone. Their product that they claimed was coming out and that worked, their technology was not there yet. It was all a fraud, and he was sent to prison. He has since been pardoned by President Trump recently, I believe at the start of this year. But that was what really caused the downfall of this company. And then in 2022 to 2024, the company continued to struggle. They were just burning through cash. Again, still not giving up of their dream for this hydrogen cell truck, this zero emission truck. Unfortunately, it never came to fruition. They did end up making the truck, and they sold not enough of them, not nearly enough of them to make any money. They were never profitable, and they at the start of 2025 in February, they filed for Chapter 11 bankruptcy, which is basically the end of this company. Since then, they have they've sold assets off to their competitors, and they've sold everything. Right? They've been liquidating their assets. So at this point, a comeback is maybe not zero, but very, very close to 0% for Nikola Corporation. Going into now the pest analysis. So this is all looking at sort of the industry macroeconomic factors for our company here. And we kind of, during this case study and kind of, we're getting into kind of some strategies we suggest. And a lot of kind of what we looked at was pretending to sort of go back before the bankruptcy and look at maybe what we would do to kind of change this company around. Because at this point, right, there's not a whole lot to do, and there's just not. Looking now at political factors, the three main factors that we came up with was reliance on incentives, policy, volatility, and trade and tariffs. So kind of the first two sort of go together. The EV car industry is driven a lot by kind of what was going on with the administration. Earlier, the last one, there was a lot of promises on credits for and just kind of just overall incentives for people to switch to these EV vehicles, to get away from gas, to get away from diesel. And this stuff changes pretty rapidly, especially with the political volatility in our country. Also, trade and tariffs, of course, we're dealing with tariffs right now. Every industry is affected by this, but EV is one of the most affected, especially when we talk about the rare earth metals. A lot of them, the vast majority of them, come from China, so there is trade and tariff stuff going on with that, and that's going to obviously make it more expensive to build these things. Going now into economic, high input cost that kind of goes with trade and tariffs, and also just it's very expensive to make these vehicles, and also doing R&D and everything that goes into making these vehicles. Again, capital access and liquidity crisis. Going out into the social factors that we thought were important, the main one is the last one there, the cultural resistance. The kind of traditional diesel culture in long haul trucking basically creates friction against moving towards this new innovative product, right? This industry has been using the same products for quite some time, and that's what they're used to, and that's what they're sort of attached to. It's been very sticky, so getting them to move to this new product, even if it was working really well, is going to be a challenge. And this is true even for looking at the overall EV vehicles. Many people have had gas cars for a while. They like gas cars and they do not want to switch. So that's a big factor. Now looking at technological factors, infrastructure gaps, grid limitations, and execution risk. A big one is the grid limitation. Having all of these EV vehicles, what do you need to charge these things? You need energy, you need power stations, and all of the infrastructure, capital and stuff that goes into that. So it is not an easy switch to just say, for companies to just switch to these new EV trucks. The infrastructure has to be there, and if it's not there, then why would these companies switch? Overall, these are our top 5 risks that we came up with as a group. I already kind of touched on most of them. I think the big thing is trust, and also just that cultural resistance, and again, the grid and infrastructure problem. Going now into the industry analysis with Paul.
Hello, I'm Paul, and I'll be discussing the industry analysis surrounding Nikola Corporation. First, we looked at the industry using key industry indicators using IBIS World. We researched the market size, geographic scope, market growth rate, industry lifecycle change, degree of vertical integration, pace of technological change, ultimate consumer needs and wants, and product differentiation. After identifying the key industry trends, we identified the firm's top 4 substitutes and 4 rivals and competitors. Looking at the chart, we conclude that Tesla was the most threatening rival. However, our substitutes look as if they are more threatening than the rivals in general. Since we had already looked over the rivals and the substitutes of Nikola, in the next section, we identified the new entrants, suppliers, and buyers. From there, we were able to analyze the power of the rivals, substitutes, new entrants, suppliers, and buyers by putting it all together. We concluded that substitutes were, in fact, the most powerful force, and the threat of new entrants was the least. Looking at the rank of the 5 forces here, we see that substitutes are the most important because, as we know, substitutes like diesel and railways are still very mainstream, and it's going to be very hard to replace those two things. Next, we see the competitors in the number 2 spot. It'll be hard for Nikola to outperform rivals like Tesla as they are starting to break into the alternate fuel trucking market. And as we know, they essentially run this industry. So it'll be very hard to outperform these companies like Tesla. Next, we see the suppliers spot. They're in the 3 spot because it's not as powerful of a force. There is a broad range of supplies needed to create an EV. However, many companies are increasing vertical integration to try and avoid these suppliers. For example, we see Tesla. They basically make everything themselves. Next, we have buyers in the 4 spot, and this is because most buyers don't have many options to choose from. There's not a whole lot of EVs out there to choose from. We are starting to see regular car brands starting to produce EVs, but for the most part, it's just Tesla and Lucid. Lastly, in the 5 spot, we see the threat of new entrants. It's very hard to break into this industry just because of the current competition with all the existing competitors, and breaking into this industry will have such a high cost, it's not even worth it for some of these companies. Next, we worked on an external factor evaluation, also known as an EFE, which is a strategy tool used to examine a company's external environment and to identify the available opportunities and threats. We got these factors by analyzing the external environment with tools like the pest analysis and Porter's 5 forces. After analyzing these trends, we were able to assign weights to each of these external factors as well as a rating. This built us a chart showing the importance of each opportunity and threat. Observing the chart here, we can see that each factor is given its own weight rating, adding up to a final score. Now diving into some of the factors here, first we have the expansion into new emerging markets. We felt that this was important as we rated it a 0.2 final score. And as we're seeing with the AI bubble right now, if you can get into these new markets, it will help your company. Moving on to growing consumer demand for sustainable products, we see that in the EV market, obviously it's new. So if one of these companies can come out with a highly sustainable alternative to gas, they will certainly have success. Moving on to government incentives for clean initiatives, obviously this is ranked a little bit lower just because it's not going to change the industry as a whole. However, it is relevant. We see these companies that are making EVs, they're getting some sort of tax break or some sort of incentive by the government to keep creating these products, and that will help boost the whole EV industry as a whole. Moving on to growing industry, obviously this is weighted a little bit lower, but we feel that it was still relevant due to with a growing industry, there's going to be more higher growth opportunities for our company, Nikola. Moving on, we have the public opinion. Obviously, if the public likes your product, it's going to be good for you. If they don't, that could potentially bankrupt you, as we have seen with Nikola. Our CEO went to jail for fraud, and obviously the public is not going to like that very much, but you can use it as an opportunity as well. Next, we have charging deserts, which essentially means that in certain areas of the US, there just simply is not a way for you to charge your EV, which can lead to some problems. Obviously that entire area of the country cannot get into EVs simply because their car is going to die and they have no way to get home now. Moving on to legal pressure, specifically in the external industry as a whole. Obviously, we've seen with Nikola, their CEO going to jail for fraud and essentially going bankrupt. That's a little bit different than what we're going to be analyzing here. However, we do see some similar situations like what's happened with Nikola happening in the EV market, mostly due to because it's new, but we'll have to see how this plays out. Next, we have varying workforce trends. It's very broad, but this can be a bit of a threat just due to how new this workforce is, trying to manufacture EVs, things like that. Again, we'll have to see how this is going to play out in the future because it is very uncertain right now. Lastly, we have competitors and substitutes. Obviously, our highest competition being Tesla. It's going to be very hard to replace Tesla, as I said before, especially with them getting into the trucking industry, as well as substitutes like gas-powered trucks, diesel-powered trucks, railways. That's been how our country has operated for years on end now. So seeing that get replaced with any sort of alternative fuel truck, it's going to take a while, and we're going to have to see how that's going to play out as well.
Thank you, Paul. We will now be going into the internal analysis and IFE with Evan.
Hello, I'm Evan Sharp, and I'll be covering workbooks 6 and 7, like taking a look at the internal strategic analysis of Nikola Corporation. starting with their financial ratios, moving on to internal strength and weaknesses, and the key findings from our IFE and EFE matrices to get ready for the SWOT analysis. Starting with the ratio analysis, Nikola severely underperforms not only compared to industry average, but compared to every major EV competitor. The company shows extremely low liquidity, high debt, and deeply negative profitability. When we compare Nikola to its competitors like Tesla, Rivian, and Lucid, and others, Nikola ranks consistently at or near the bottom. In the current ratio, the quick ratio, asset turnover, and especially profit margin, and the return on equity, Nikola has a profit margin of roughly negative 545%, which is significantly worse than the already struggling EV competitors. These ratios show that Nikola is not only generating enough revenue, not controlling costs, and not producing at a scale that allows them to compete. Overall, the ratio analysis reveals consistent financial instability and confirms that the company is at a serious risk of failure without changing. Moving into the broader internal analysis from Workbook 6, the internal environment shows a company defined by strong technological ambition, but overwhelmed by structural weakness. Nikola does have certain strengths, particularly in hydrogen and battery electric vehicle technology, but these strengths are overshadowed by issues like legal battles, poor capital management, and negative public perception. One of Nikola's only true internal strengths is their innovative technology. We gave them a weighted score of 0.3. Nikola's hydrogen electric technology has the potential to be a catalyst for them if executed properly. This technology could differentiate Nikola from competitors and give them a competitive edge. However, despite this potential, technology alone is not enough to counter the company's serious financial and operational problems. Next, taking a look at the weaknesses in the IFE matrix, the first major weakness is their legal battles, which we gave a weighted score of 0.15. According to our analysis, these lawsuits have been one of the top contributors to Nikola's downfall. The former CEO, Trevor Milton, was convicted of fraud, and the company continues to deal with multiple lawsuits for misleading investors. Beyond the financial cost, these legal issues have damaged the public and investors' trust, making it incredibly difficult for the company to recover. The second major weakness is Nikola's urgent need for capital. We also gave that a weighted score of 0.15. They have been forced to sell assets, including trucks, software, and intellectual property, in an attempt to stay afloat. A lack of capital has prevented Nikola from scaling production, investing in infrastructure, and developing the hydrogen ecosystem required for the long-term viability. This capital shortage is so severe that it threatens the company's ability to survive in the near future. Shifting to the EFE matrix, Nikola does have one meaningful external opportunity, the growing demand for sustainable products, which we gave a weighted score of 0.1. The public pressure to address climate change has fueled the boom in the EV industry. Consumers, businesses, and governments increasingly want zero-emission solutions. If Nikola were able to stable their financial position, this trend could help accelerate their growth. Unfortunately, their internal weaknesses prevent them from taking full advantage of this opportunity. One of the largest external threats to Nikola is their competition, which gave a weighted score of 0.2. Tesla remains the dominant leader in the EV market, and companies like Rivian, Lucid, and legacy automakers are aggressively expanding their electric and hydrogen product lines. These competitors have strong financial positions and can afford to operate at a loss for an extended period. Because of Nikola's lack of capital and the scale needed to compete, these competitors pose a major long-term threat. Finally, the most damaging external weakness is their public opinion, also weighted at 0.2. The public perception of Nikola is overwhelmingly negative, fueled by fraud from the former CEO, failed product promises, and the company's bankruptcy. In any industry, credibility is essential, and in the EV market, where companies rely heavily on investor funding and long-term partnerships, trust is everything. Without a strong public reputation, Nikola cannot attract new investors, customers, or strategic partners. Overall, Nikola is a company with innovative technology and strong long-term potential, but it is overwhelmed by financial instability, legal issues, and severe public distrust. The IFE and EFE analyses make it clear that despite market opportunities, Nikola's internal weaknesses are too significant to ignore. For the company to survive, it would need to secure capital, rebuild trust, and overcome intense competition, all while trying to execute a highly complex hydrogen electric business model.
Thank you, Evan. We will now be going into our last section here with Nick, who will be covering the SWOT analysis and the McKinsey 7S framework.
Yeah, so moving on to workbook 8 here, we got our SWOT analysis as well as our McKinsey 7S framework. Again, so just quick definitions for each. Our SWOT, going over the strengths, weaknesses, opportunities, and threats for Nikola Corporation. We got that right from our EFE matrix that we did in workbook 5. The SWOT analysis focuses on pairing up a strength or weakness with an opportunity or threat, and then creating a resulting strategy from the pair. So, for instance, we paired innovative technology with growing industry, and we suggested that Nikola ramps up their research and development because it will allow them to figure out what is going on with hydrogen fuel cell technology, and therefore allows them to be the first ones to address the growing demand for zero emission trucking moving forward. The McKinsey 7S framework we went over, it's just kind of addresses how each part of an organization works within one another. So how do their staff align with their skills? How do their core values align with the structure of the company? Stuff like that. We each picked a strength and weakness and compared it and paired it up with an opportunity or threat. We did that for each section of the SWOT. So we did strength and opportunity, strength and threat, and so on. And then we created 4 strategies for each. So that gives us 16 strategies total. So we then narrowed it down even more into the 4 most important ones, which was to hire a team of consultants, financial advisors, lawyers, to address the legal issues. We felt that it was necessary to ramp up the research and development because nobody really knows the potential of hydrogen fuel cell technology. The potential is kind of unlimited. The strategy, we wanted them to hire some highly trained workers and maybe just create more trainings for their in-house workers because hydrogen fuel cell technology requires a very high level of expertise in zero emission energy. The final strategy that we suggested was positive media surrounding these hydrogen fuel cell technology and the zero emissions market that Nikola is trying to get themselves into because we feel like the attitude towards the even EV industry is kind of mixed. The attitude towards Nikola is primarily bad because of the choices that their former CEO Trevor Milton made. So some positive media stating how Nikola is trying to be one of the first ones to create a working zero emission hydrogen fuel cell truck, we think will really help their image. And then just to kind of sum up our 4 strategies, kind of talk about our overall thrust here. The main business strategy is we want Nikola to first address their issues of the legal issues, their financial struggles, the attitudes towards Nikola, because we want them to address problems of the past, and then we can move forward and figure out how we want to grow our business. So after addressing our problems, we then moving forward we'll ramp up our research and development and then train our employees internally and hire some highly trained workers that will help us to mass produce our hydrogen fuel cell trucks, as well as the highly trained workers will also help with research and development. So okay, and then moving on to our McKinsey 7S framework. Again, this is kind of just how each part of the organization aligns with one another, as well as how it aligns with our 4 suggested strategies here. The core mission that we found for Nikola, or at least one of them, is to pioneer solutions for a zero emissions world, and we feel that fortunately this perfectly aligns with our resulting strategies that we suggested from earlier. Pioneering, meaning that they want to be one of the first ones to address the demand increasing for zero emission trucking. We suggested the ramping up of R&D, ramping up of mass production, and being the first ones there means that you have to be the quickest innovators and the quickest producers, and we feel that it is of the utmost importance that Nikola does beat out its competitors because in the past they haven't really been able to address their competitors properly, at least we think. That kind of addresses the shared values, but we'll kind of go into each briefly. So beginning with structure, we suggested that they split up their operations into truck and energy. Truck kind of focusing on the mass production side of their operations, as well as building up the staff at the Coolidge facility, which will minimize the production costs, as well as we just feel that they'll benefit from bringing all the processes in-house. And then the energy kind of focuses, again, on the R&D side of things, where we feel like they could really benefit from figuring out what makes hydrogen fuel cell technology so intriguing for investors moving forward. So the R&D in this sector could be really crucial to Nikola's success moving forward. Moving on to systems, we suggested a smart factory to be implemented at their Coolidge facility, which allows Nikola to monitor the quality and the assembly line efficiency all in real time using technology. And then staff, we think that they could utilize their pre-existing staff and train them. but they could also benefit from hiring some highly skilled, energy technicians and people with lots of experience to train the younger staff, the less experienced, on how to successfully mass produce, will allow them to really, really ramp up the rate at which they research and develop their hydrogen fuel cell technology trucks. And finally, skills kind of goes with hiring, the highly skilled staff. It is vital that they are highly trained energy technicians and they have lots of experience in, assembly lines and research. We feel that these are two of the main points of focus that we want Nikola to focus on moving forward, is the R&D and the mass production. So figure out how they can implement this new technology into their business model, which will allow them to then turn their efforts into profits moving forward. Yeah, so kind of just a conclusion, we think that with the 4 suggested strategies, Nikola can really turn things around. Again, they're positioned well in a industry that we expect to grow with, the changing regulations. Attitudes surrounding zero emission are likely to evolve even more than they already are. People will probably start to care about it even more, then increase the demand for zero emission commercial trucking moving forward. So if Nikola is the first one to get there and beat out all the competitors, we think that they will be able to dominate this industry.
Thank you guys so much for watching. Just to kind of wrap up here, I believe the main takeaway from this is that we've kind of learned a lot of what not to do with this company. They made sort of a lot of mistakes, especially when it comes to that trust and really building that trust with the customer and also the stakeholders. Once that trust was kind of broken in 2020 with the CEO Trevor Milton getting charged for fraud and then being fired, of course, it was just downhill from that, and the company was never able to recover. So trust is really super important. It goes such a long way, and once it's broken, it's so hard to regain that trust. So thank you guys so much for watching, and we hope you enjoyed.